How's it going, everybody? It's Stas here. So in this video, we're going to be doing a quick M1 Finance portfolio update, going over one of my long-term accounts here and talking about exactly what I've been doing as of late, stocks, ETFs that I've been buying, changes, if any, that I've made to the portfolio, and what I'm looking to do over the next couple of weeks in terms of buying and maybe even selling some stocks in this portfolio. And first and foremost, guys, this is not a trading account. This is not an account where I'm buying and selling in and out every day, every couple of weeks. No, this is a long-term account. This is a dividend growth account. This is an account that I actually started back in July of 2019. And yesterday, guys, believe it or not, was the 1-year anniversary of this portfolio. And if you guys may be new to the channel, maybe you haven't seen the previous update videos, check out the playlist link down below in the description box if you want to see where the portfolio started from $0 to where it is today. And again, it's not a trading account. It's a long-term account where I have a lot of dividend names, a lot of dividend growth stocks, and a lot of growth names as well. So without further ado, if you guys find value in the video, hit that like button for me, consider subscribing to the channel, and let's get right into it. So right now, the portfolio is valued right around $4,300. And again, we started it exactly a year ago, a year and a day ago, back in July of 2019. So you can see the progress that it made, right? We started off pretty light, $100. In August, it got to about $200, September about $200, and quite honestly, all of these first couple of months here from July, August, September, October, November of 2019, I wasn't really putting too much attention to the portfolio. But if you guys watched my episode right in the beginning of 2020, my main goal for this portfolio was to blow it up in 2020, right? To take it from $1,000 and maybe blow it up to $10,000 by adding money every single month religiously, anywhere from $500 to $1,000, right? And so far in 2020, we've been doing pretty well. You guys can see the portfolios went from about $1,000 back in January, and now it's at around $4,000, and that's been with, of course, dividends, some capital appreciation, and of course, me depositing money in as well. So let's just get right into it, guys. And again, it's a dividend portfolio. There's some growth names, and you guys can see right here, my biggest position right now is SPHD. This is a dividend ETF. It's a low volatility S&P 500 dividend ETF. And this is actually one of the changes that I've made to the portfolio. Previously, this was actually a 10% target weight of the portfolio. Now I've actually dropped it to 7%, although the actual target is still 12%. So the way that we're going to lower it from 12% to 7% is we're going to add money into underweight positions, and eventually it'll get from 12% to 10%, and then it'll eventually get to the 7% target, right? So we're going to see SPHD and DGROW kind of be the anchors of this portfolio. DGROW is a dividend growth ETF. So we have a dividend growth ETF here, and some of the top holdings in this ETF include Microsoft, Apple, right? Those types of stocks. And we have, again, SPHD, which is not much of dividend growth. It's more of a high yielder, but it's more low volatility. That's kind of how the fund is ran. So we have those two at the top here to anchor the portfolio. And then under that, you see Realty Income, which I actually also dropped this one from about 7% target to about a 5%. I want to have a little bit less exposure here to real estate. Then we have Johnson & Johnson under that, which is right around 7%. I'm going to keep it at that, right around 7.5% of the portfolio. We have Microsoft under that, and this is a dividend growth play. The dividend is not immaculate, right? It's not anything crazy. It's only about 1%. It's actually less than 1% now. But the idea here is kind of like the dividend growth ETF. The dividend is not much now, but maybe in 5-10 years from now, as the dividend continues to grow, and trust me guys, Microsoft is growing the dividend pretty quickly. The idea is in 5 years, the dividend is going to be higher, right? It's going to be maybe 3%, maybe 4%, right? And at that point, we're going to be churning some pretty nice cash flow from this Microsoft position. Then we have Amazon, does not pay a dividend. That's around 6% of the portfolio, same exact percentage weight as Microsoft. Then under that, we have Mastercard. Mastercard's an underrated company, in my opinion. It's quicker growing. It grows way faster. Not way faster, but it's a faster grower than its main competitor, which is Visa, which is why I like it a bit more than Visa. And it's also in the category of a dividend growth stock. It pays around a 0.5% dividend yield right now, which is really nothing at all. But again, same with Microsoft. The idea is in a couple years from now, they're going to be paying a higher dividend. The stock's price should be higher at that point as well. And we're going to be churning some pretty nice cash flow at that point in time. That's around 6% of the position as well. Under that, we have Disney, Altria, and these two are more, Disney is definitely a blue chip stock. I don't think I'd consider Altria a blue chip stock, but either way, Altria pays a lot when it comes to dividends. It pays around an 8.4%, so this is a nice high yield play that I personally like. And Disney, if you guys recall, they actually slashed one of their dividend payments for this year. They paid twice annually. They slashed one of them due to the whole crisis that we're experiencing, but still for me, it's a long-term hold despite them slashing the dividend, and they pay right around 1.6%. And once this whole, CV situation passes, that dividend should come right back and it should continue to grow as business resumes back to normal. And under that, we have PayPal, which is probably the best performing stock that I have in this portfolio, guys. My average cost here on PayPal, if you guys take a look, let's take a look at it. It's around, where does it show you that? Oh, it's around $108, and right now it's trading at about $178. So a big move there when it comes to PayPal. And under PayPal, we see Duke Energy, around 3% of the portfolio. This is a kind of a cash flow play as well. Not much growth at all, but they have a nice dividend of about 4 to 5%. We have VEA under that, which is a developed markets ETF to give me some exposure to economies outside of the United States, right? This ETF does not include United States companies. It's actually an ex-United States ETF. So check this one out if you guys do want some long-term exposure to developed markets outside of the U.S. Then under that, we have 3M, which pays a nice dividend. 2% of the portfolio is the goal. We have Facebook under that, which does not pay a dividend, but it's a nice growth play. We have McDonald's, which does pay a dividend of around 2.6%. Very strong, solid blue chip stock that I want to own for the long term here. And you guys will notice, right? I don't have any speculative positions here. I don't have any high-flying growth stocks in here. This portfolio is meant to be a very safe, blue chip oriented portfolio for the long term. And trust me, guys, I do have other portfolios where I have a lot of speculative names, such as, NEO, for example, and a lot of other ones as well. But the way I've structured this one, again, is to be a very safe, dividend-oriented portfolio where I just put money in it every week, every month, whatever, invest, and kind of just forget about it, right? And just have M1 Finance automate it and do its thing. Well, honestly, I don't have M1 Finance automated because I like being more hands-on, but if you guys do use M1 Finance, one awesome thing about it is you can have it automated for you to the point where you can turn on auto invest, which I'm not going to do, but if you do, It literally invests the money that you put in based on the slices that you have here and based on the target allocation of those slices. So it can be very passive here if you want it to be, which is why I honestly love this platform, M1 Finance, and why I personally use it, right? Which is why, which is why I like it a lot, because you can split it down, you can see it nice, broken down here in a pie format. And again, you can really make it passive if you choose to have it that way. And under McDonald's, we have Pepsi, we have AbbVie, we have AT&T, and we have Procter & Gamble. And these four are very nice paying dividend stocks. And remember, I cut a little bit of SPHD. It was around a 10% weight. It might have been a 12% weight. Now it's 7%. So I actually I want to put more weight into Pepsi and Procter & Gamble. I actually bumped those up from a 3% allocation in each to a 5% allocation in each to really build around them, because honestly, guys, although they may be a bit overvalued here when you're looking at PE, I want to own these for the long term, and I'm willing to pay up for very quality blue chip companies, and that is exactly what Pepsi is, and that is exactly what PG is here. And same thing with T, right? I don't know if I'd consider AbbVie a blue chip stock quite yet, but all of these I'm looking to buy into and just hold them for the long term. So you may be asking yourself, Stas, your portfolio is $4,000, $4,300. How much money are you actually making from this portfolio in dividends? Well, let's take a look. You guys can go here. We're going to go here to activity. We're going to sift and see only the dividend payments. And you guys can see it's churning some pretty nice dividends. I'm not making killer money here. I'm not making $100 a day in dividends. That'd be amazing, right? But I am making $2, $3, $4, $1 here and there. You guys can see in June alone, I got a lot of payments. I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 dividend payments, and I believe they added up. I added it up previous to me filming this video. That's about $15 in pure passive income. Literally, I didn't do anything to receive this $15 other than simply buy into these stocks, which again is a very passive form of investing here, especially in this portfolio where I'm not looking to get in and out like I do in my trading account. I'm just looking to buy and hold for the long term, right? So it's a very slow grind, guys. It's a slow grind. This is not meant to be a year or two and then you're rich, right? This is supposed to be a long way to get rich, kind of a patient way to get rich, right? And the idea is, after 5, 10 years, 15 years of continuously adding $100, $500 a month, $1,000 a month, the idea is to get the dividend income up to a point where it can maybe pay your car payment, your mortgage, maybe your phone bill, right? So you don't have to work actively for all of your income. You can have your portfolio take care of it, take care of some of your bills, and later in life, take care of all of the bills. That's the goal, right? To have passive income cover all of your bills. And dividend investing truly is one of the purest way to make passive income. You see all these people out there talking about YouTube's passive income. Trust me, guys, I'm a YouTuber. It is not passive income. There's a lot of work into being a YouTuber. People say real estate's passive income. Sure, once you get the house, renovate it, start renting it out, then it's passive income, but still you have the headache of of being a landlord, your tenants doing this and that, causing problems, who knows, which is a hassle. So for me, dividends is really the purest way of just putting money in and getting that dividend income back and really doing nothing for it at the end of the day other than just researching the stock and then buying it and continuously adding money into it over time. So yeah, that's pretty much it, guys. That's what the portfolio is looking like. We made $15 in dividends in the month of June. And make sure to subscribe. And again, check out all the different videos in this playlist to see where the portfolio has come and where, from where it's come to where it is today and where it's going to go in the future. I'm telling you guys, I'm going to blow this portfolio up 10,000, 15,000, 20,000 over the next couple of months. So make sure to stay tuned to the channel so you can be a part of that and see exactly what I do end up doing. And before we do wrap up the video, guys, I almost forgot. What am I looking to buy? Well, all of these stocks here, out of all 1920 here, the ones that I'm focusing on the most are going to be Pepsi, are going to be Procter & Gamble. It's going to be AbbVie as well. Mostly these underweight positions down here. Maybe even a little bit of Facebook. Maybe not Facebook because it is near all-time highs. But McDonald's, Pepsi, AbbVie, T, and PG. Those are the 5 that I'm going to be focusing on the most in terms of adding more, dollar cost averaging more into them. So let me know your thoughts down below in the comments, guys. What are your thoughts on this portfolio? What are you doing in some of your long-term accounts? I'd love to know. What stocks are you buying? Are you selling anything? Let me know down below in the comments, and make sure to smash that like button if you haven't done so already. And if you guys actually want to be a part of the Strive Smart community, I have a free Discord chat down below, free Facebook group as well, and you guys can actually get $10 if you sign up to M1 Finance through my affiliate link down below in the description box. And I believe that's if you deposit any amount of money, you get $10 in return to invest, and I also get $10. So yeah, if you want free money, that's linked down below, and I'll catch you all in the next video. Have a great weekend. Have a great long weekend. Peace out, guys. And of course, stay safe out there as always. I'll catch you all in the next video.